Guys, welcome to Breaking Down Barriers. Today, we're sitting with the founders behind one of the most transformative fintech real estate platforms on the planet, Stake, featuring Manar, co-founder and CEO, and Ricardo, co-founder and CTPO of Stake, a company that has over 1 million users, over 1.3 billion in transactions, 250,000 plus investments across 500 plus properties, over 50 million AED in rental income paid out, and now expanding across US, KSA, and beyond. Today, we're going to be breaking down how they built a killer product, how they're scaling globally, how they're navigating regulation, embracing tokenization and digital assets, and built a team capable of redefining how the world invests in real estate. Let's start at the beginning. It's a pleasure to have both of you on today as well. What was the moment when the idea for Stake really clicked for both of you, and how did you come up with such an amazing brand new concept in the world?
Firstly, thanks for having us, Ricci. It's a pleasure to be on. Watch your podcasts and quite closely and find them very insightful. Hopefully, we can give some insights today. The genesis of the kind of business started in like 2020 when we kind of first started with the first effort to build the MVP and get licensed. Historically, I bought a property when I first moved to Dubai in 2006. Back then, and the market was on fire, right? I wanted a piece of the action. I bought a property with my first bonus from banking, and I overextended myself basically with the budget. I took on a 20-year loan, and I saw 50% up, and then I saw 75% down in the span of like 12 months, literally, because it was just before the global financial crisis. But long story short, held on to it like a true real estate investor for like 15 years. And when I had to sell it, for the same kind of price that I bought it. But I ended up losing more than 50% of my investment. Why? Because the interest on the mortgage for 15 years, ends up adding up to that amount. So squarely the worst investment I've ever made. It took out 10K dirhams out of my salary every month, down the drain. And to do justice for that painful mistake, this problem kind of resonated. Me and Rami know each other from high school. We kind of always had parallel careers, mine in banking, him in real estate, so it made sense to join forces. And we were very fortunate very early on, even before we started the MVP, to meet Ricardo during COVID on a Zoom call. But things didn't pan out at that time. We couldn't effectively afford him. We were bootstrapping the business. But after our first round, immediately we crossed paths, and that's when we made it happen. And 2 months in, we knew Ricardo as the technical co-founder that we were always looking for.
Amazing. I mean, it's good to always get that backdrop, and hopefully you're making up for that investment now in the early days. So in the early days, like, what was probably the biggest misconception people had about fractional real estate investing in such obviously a new concept and a new way of working?
Look, that's absolutely. I mean, I can let Ricardo also touch on this, but this was the challenge we were facing, in the early days, which is everybody knows how to invest in stocks. Everybody knows how to invest in. I mean, learning how to invest in crypto. It was actually in 2021 very topical, and everyone wanted to jump on the bandwagon and get rich quick. Before it all went downhill in 2022. But the real estate part was less attractive, less sexy. You can only make around 6% annual. But we were trying to make the asset class attractive by gamifying it, giving back cash back and all those sort of things to really kind of make it ultimately a product that is for everyone. Is not intimidating to enter into as a kind of product, and at the same time distributes these dividends on a monthly basis. So what we discovered there was that it's quite a viral thing to do, but on the awareness piece, it's very alien to a lot of people. How can I enter real estate, buy a property with just 500 dirhams? Maybe I'll hand over
and
to.
just on that though as well, and we'll probably come to it later. Like, did you find that initial user adoption and trust element hard? And did you have to pivot as well quite early?
Yeah, I guess. Thanks again. Thanks, Ricci, for having us on the podcast. I think trust is one of the biggest barriers you face in the beginning, because you are trying to introduce a new concept into the market, and you are trying to attract a user that is typically a retail user that, like Manar said, maybe is used to invest in stocks, maybe in just starting crypto. But when it comes to real estate, everyone has a preconception that you need a high amount of capital. So I think that's one of the barriers. And if you are a startup, you are not established in the market, right? So you are asking, it's almost counterproductive. You are asking someone to give you their money to invest in real estate, but you are a startup, so you need to really, one, educate on the product, but also educate who we are and how we are regulated and how the investor protections work. So I think probably that's I would say one of the first barriers you need to overcome to make us, I guess, on the track to success.
And I would highlight one of the things that I was about to say we did was trying to align a bit more with e-commerce. Just some small additions to the product, like add to cart, and check out with a basket of steaks was kind of the concept we wanted to go with, because everybody started adopting e-commerce so much that we want to basically align with that movement, as opposed to going with an intimidating investment platform ultimately. And the trust factor really was trying to highlight the security that you get, your share certificate and the title deed, and really leveraging on our license from the DFSA, basically being regulated by the Dubai Financial Services Authority, as a stamp of protection for investors who think this is a scam.
I mean, you kind of answered my next question, which was going to be those early challenges, obviously, in launching in 2021 and the real estate ecosystem being different. And we move to, whilst we've got both of you, how did you then divide the responsibilities, CEO, CTO, 3 co-founders, essentially,
Yes,
right?
yes.
And how has that evolved over time? And how easy has it been?
I'll say firstly, we're co-CEOs, me and Rami. And that is unusual. I don't know how many you've come across, but we used to get a lot more, let's say, reservations about that setup.
Yeah.
But people now understand it actually works. It was one of those kind of early decisions that we made together that we want to both be leaders in the company, and we set out very clear mandates for each one of us. Like, we really segregated the responsibilities. So he looks after sales and marketing and real estate operations, Rami Tabara, and I look after compliance, finance, company operations. We have shared responsibilities when it comes to capital raising and things like PR and so on. And then we left product and tech entirely for Ricardo. And actually, with time, additional kind of responsibilities extended, like data and growth and so on and so forth. So it really kind of, it's very clear for everyone in the team who they go to for what.
I mean, definitely the right way to do it. The hard bit, though, is obviously with especially sort of co-founders, CEOs, is giving the sort of the product baby away as well, and in the early concepts. I'm sure that you probably both had ideas around that as well.
Yeah. So actually, when I met the Rami and Manar, I remember us going to a dinner. Probably in the first few days we met in person, and we did. We opened the book that's saying that they need to be managed. We need to discuss products deeply. And those early decisions were very important to us. For example, I think this idea that Manar was saying, that you need to approach the experience of investing in property more close to e-commerce, because people are, e-commerce, everyone buys things online. We are used to buy things online. How can we make it simple? And trying to pull back that complexity has been one of the early decisions we made. So I think in the beginning, maybe how it has evolved is, I think in the beginning we used to sit, the 3 of us, discuss a lot of product related things. And as the company grew, and as we grew in our own roles, and we had maybe less time and more responsibilities, we established a cadence where we can still be aligned. But I think the direction on the product strategy is today with me. But we ensure that product is not built in a vacuum, is aligned with what we want to achieve as co-founders, and we aligned with the company direction.
Yeah. And on that, and obviously operating more like an e-commerce type model, do you feel that naturally hits a younger, I'm going to go into it a little bit later on, like sort of the Gen Z side of things, but does that hit a younger audience versus the trust maybe in a different generation in terms of how they invest in real estate, and then this whole new like sexy trendy technology investment real estate platform, do they adopt this, and is that hard?
Yeah, I can, let me try to answer. Like, I think so. My background, like, I came from building similar businesses in UK. And in UK, you are seeing a trend, kind of fintech center of the world for a good period last decade. And you see like companies like Revolut, Monzo coming, and people shifting from traditional banking to online banking to mobile apps, and all these trends are going on. And when I arrived to this region, I saw that trend, and we discussed openly, we need to make this an app, because there's an app to invest in everything. There's an app to invest in crypto, there's an app to invest in stocks, but there's not an app to invest in real estate, and we're going to be that app. And I think that guideline has been important for us, that decision. It's a single decision, but it's quite important in shaping to our business. And yeah, I guess you are trying to simplify the experience, but at the same time, and I think complicating an experience, making an experience complicated is always the easy thing to do. So our approach has been mostly try to simplify it, but of course give the necessary data and depth if the user needs it. If the investor needs more data, we have. For example, I'm going to give you an example. If you go to our app, you can see the high-level projection details. But if you want, you can download a full-blown model that is a spreadsheet, and you open it in our desktop, and you're going to figure out all the costs and all the line items. Do people want to see all the line items from the get-go? No one wants to see them. But eventually, maybe 10% of the users want to see them, and we allow them to have that accessibility.
No, that's amazing. I mean, your product feels incredibly polished, and I can say that you have so much positive feedback in the ecosystem. Even when I talk to founders, are like, can you get me maybe like a product leader, product designer leader that's kind of worked on maybe the Stake product or whatever it might be. So that's testament to what you've built there, right? It's frictionless onboarding, clarity on return, some bits you mentioned there, the liquidity windows, diversification of scoring. So what is your product philosophy then?
It's a product. It's a good question. I think it's a product philosophy based on iterative approach, and an iterative approach. This I think is very hard to achieve, and it's very hard to practice. Most importantly, a lot of people say iterative approach, lean, and all these philosophies, but they don't practice. And the way we actually work together, Manar, me, and Rami. Has been mostly about like taking some risk, really, because we are a regulated business, but we also like are a young, exciting business. So I think we took an approach of, first of all, creating a product that is incremental, bet that we can improve the product 1%, use data to improve that product, and really think that if we do that consistently, those gains will compound. So, for example, I think we have redone our onboarding journey probably around 5-6 times to get it right. And am I happy today where it is today? I think there's margin, probably single-digit percentage we can improve in terms of conversion rate, probably. So there's always something you must do. But I think instilling this philosophy to the team and instilling that, we want to go very far, but before we go very far, we need to have clear milestones, and putting that on paper. I think that has been probably one of the most shaping things we do, like creating a concrete roadmap, having concrete quarterly goals, and rallying everyone in the company around those goals. I think it's probably one of the things that we've done right during these 4 years, 5 years.
And you had a lot of product wins. If we highlight and index on one, the diversification score, like What problem were you trying to solve there, and how did that come to life?
Okay, let me just answer that one.
Yeah.
Diversification score comes from us observing user behavior on our product, and comes from our approach to what we want to be as an app. So we want to be, first of all, a global app that you can just download, like you download Uber, like you download maybe Deliveroo, and you can order food or you can order a cab. We want to be the app where you can download, you can diversify your real estate investment portfolio. And what we are observing is some people coming to the app and making that first, second investment and having a lot of concentration risk. Maybe they invest in Marina twice, and our product has so much more depth and breadth that we really want to inform the user. How can they have a more diversified portfolio? Because we really believe that all these users are portfolio builders, if you wish. They are not property moguls, but eventually they will become owners of multiple units. So it's really a lens, a summarized lens. What is the best next investments you can make in order to take less risk and diversify your portfolio? So, for example, with the Saudi Arabia product, which is real estate private funds we launched last year, we are now trying not to convince, but we are trying to suggest that there's a really good asset in another region, in another country. You can get really good yields. Some of these assets are really unique, and we are trying to make the users see there is an opportunity elsewhere. So it's really, if you wish, it's not an advisory, but it's more a navigation feature to show the breadth and depth of our product.
And I'm assuming you're probably going to have to analyze more and more data as you enter new markets, because people have different ways of working, right? So then you're probably going to have to adapt the product, the service in some ways, or keep it the same. What works, right? But it's a challenge.
Manar can talk about that, but I guess the Saudi market is very different. We definitely need a different approach to the product. We are learning as we go. I think we really have product market fit in UAE. But as we go to other products and other markets, we then definitely we need to adapt and read the data, read between the lines.
And while we're on the product, you launched faster withdrawals, stake rewards, pay to card. Like, what has been probably the most impactful product decisions over the last 12 months? And
it's a good question. I think I don't want to single out one for now, but I would say over the last 12 months, we really looked at the customer feedback, what are users saying, and what can we solve for, and what can't we solve for. I'm going to give you a very simple example. As we scaled, some of our operations did not scale with it, our internal operations. So we are trying to, I'm going to point to maybe two things we did this year that are important. For example, we have a way to process withdrawals much, much faster. We are processing withdrawals internationally now directly through the Visa and MasterCard schemes, directly into the user's card. We are also processing withdrawals within minutes in UAE through open banking. So that has been very important, because as the number of withdrawals increased, and I want to understand where withdrawals come from. Withdrawals come from people exiting so reselling a property and people realizing a return. So it's normal that people will take, and also from monthly dividends. As we accumulate more and more investors, those monthly dividend amounts become bigger, and the number of withdrawals shoot up. So we had to be prepared internally to process that. So I'm going to say, typically we'd get, why is my withdrawal processing taking so long? And now, it's within minutes. So that has been a really positive thing for our users.
Yeah.
So putting the customer at the center of our product development. The other thing that we have done, I think this year, I'm going to say Saudi Arabia has been a massive achievement for the team, even though that we launched last year. This year has been really the year that we went much deeper into that market. It's early for us in that market, but we see really good potential. It's been fascinating to see how customer behavior changes from market to market. How, for example, Arabic is super important in our app as we operate in a different market. So there's probably a ton of things I could mention, but understanding the depth and the breadth of the market is really important in allowing the product to meet that feedback.
I would just add that I felt when we added the tiers, we had a famous breakfast at Comptoir in Jumeirah, next to our where we live, and we were discussing how do we create loyalty. Because there's so much repeat investment behavior on the platform. That's what I meant earlier by paying dividends monthly. This was a discovery that it tends to generate a lot of stickiness and repeat behavior. And right now, to give you an idea, about 70% of our monthly GMV comes from repeat because people use it as kind of a piggy bank where their money compounds. Maybe to address your previous question on the demographics, the asset class tends to attract more mature, older, male investors by definition. Kind of the 30 to 40-year-olds are our largest cohort, but by kind of numbers, this is by total GMV, if you will. But if you look at numbers, the Gen Z, which are under 30, are quite a lot. They're quite maybe the highest, but by GMV, they're like third in line. The second in line is even the older 40 to 50-year-olds in terms of wallet size, and this kind of tiering system that I mentioned earlier. Really creates this kind of incentive to increase investing because they want to reach, we have intro plus pro, elite, and then prestige. And, they want the badge. And funnily enough, it was a funny story. This summer, me and Rami were in Greece. And we were walking around the town in Mykonos, and then some guy literally stopped us and said, "Oh, you guys are the founders of Stake." And he showed us he had a wallet because we give the wallet to the elite guys, and it has a branded wallet of Stake. And he's like, yes, I'm so proud. And for us, that was a really rewarding moment, honestly. So that effect, I think the tiering system was incredibly impactful as a product, introduction and an innovation ultimately in this kind of platform that we built.
It's the subconscious mind. I remember because we talked about, you said earlier, obviously the UK transition into Revolut and Monzo, and at the time people were like, people aren't going to move over to these random digital challenger banks. But then they used the concept Monzo of the card, and everyone wanted the card, but you had to get a card, you had to refer a certain amount of people, and it just becomes that subconscious mind. In terms of, obviously, liquidity has obviously been one of real estate's biggest barriers, right? Your exit windows since 2023 have been game-changing, but how did you design liquidity into obviously a liquid asset class as well?
Yeah, so my background here is relevant because in UK I also ran a platform that was, also regulated, that were dealing with another asset class that was illiquid, which was private equity. So, and this company was called Cedars, got acquired by Republic in 2021, which Republic is now one of our investors. A bit circular economy here, but the same problem. So I had experience solving that problem for about 5 years in UK, and it's a problem hard to solve. First of all, it's good to say that, but it is possible to solve. And I think if I look at what Cedars was doing back in UK, I think we tried to solve that problem in year 7 of the company, probably year 6, 7. And it was not too late, but it was definitely late. I think when I joined the guys here, we really had really good conversations about, how can we solve this early on? How can we solve this in the first probably 12 to 24 months? Because this is something, how we see the asset class. The asset class should be liquid. We should not get stuck. If you want to exit, you should be able to exit. So we were the first in this region of the world to create we call it a trading facility. It works like a secondary market. So it's a peer-to-peer sell. You can sell your shares to another peer in the platform. We structured like we open the window two times a year, And however, we cannot guarantee the sale. We definitely can guarantee there are really good liquidity levels at a discount. So it's a bit liquidity is a double-edged sword in the sense that you can allow liquidity, but your end game is to convince someone to realize good returns in real estate. You need to hold the asset for 3, 4, 5 years, and that's where you're going to maximize returns. So, some users want to liquidate early. We allow them to liquidate early. Probably they don't see as good of returns as they would see, but most users do hold on the assets and do see really good returns, and that's what the asset class has to offer. So, with I know you're probably going to touch later, but with the likes of tokenization, we do see that as let's say a step forward in terms of liquidity. But the fact that we with an SPV model allowed liquidity early on, for me, has been probably one of the biggest milestones of the company as well.
Big time. It used to be the biggest blocker, basically, when we used to ask people, why aren't you investing? Because they don't want to be stuck. So giving them an early exit route was essential, really, as a part of the essential part of the product.
I mean, it makes sense, and obviously, then you would have seen that in the results, right, and the data after that, the user adoption. From a technology perspective, then, what is the hardest thing about building a platform that obviously handles real estate, payments, KYC, investor returns, compliance, and portfolio tracking? I mean,
it's a good question. So, I think in the end, I think you need to drive forward. I think you need to really, I think for us has been really a crossover between fintech and real estate. I think you need to know about, you need to be a subject matter expert on the topic, and you need to have good customer analysis and good understanding of customer trends, and build a product that people love. For me, probably that's the single thing I would ask myself every single day, is that how can I build a product that people want to open, want to love, they see the returns, we can meet the promise that we have. And, if you can solve for that, then, the investors will come every day, and we're going to have repeat behavior and all that. But I just want to say, probably the biggest challenge is how to create an emotion. I think, how can you create a product that creates an emotion? And I think, or creates a feeling. It's not so functional. It's more, how can I be proud? So there's a lot of things we leaned on where I think people want trophy assets. People want to say in a dinner, you know what? I'm a property owner in Dubai. Or people say, I get rent every month. We picked up those gimmicks, and we try to make them as digital as possible. So, for example, our investors have a payday. They have probably their job, but they also have a payday because they earn rental income with us, and that is fascinating. That's what users love about us. So in the end, and then if you have that vision clear, is how you broadcast that to your team, like how we can scale the team following those principles, because we as co-founders, we cannot do everything. It's more about like, how can we transmit these ideas in a consistent way so our team can follow and can also build upon those ideas.
Yeah. And tokenization and blockchain, where does it sit in your infrastructure today, and where does it go in the next 12 to 18 months?
Well, we're working on it, is the short answer. But in terms of belief and conviction, we know that it's the future. Dubai Land Department has taken a bold step forward in terms of saying they want 60 billion dirhams on the blockchain of real estate on the blockchain by 2033, and so that gives us a really good kind of line of sight into where we're headed, and they've already started with a few test transactions with a couple of players under VARA. So it's a different kind of regulatory regime, one that we really keen to kind of have a foot in. We see a ton of benefits out of the commercial implications, being operating under a tokenized framework. Essentially, it boils down to two things: more operational efficiency for us as a business, and for investors, cost savings. So financial capital efficiency on that front, and the third very important aspect of it, which is still a bit yet to see how it's going to actually work is the liquidity, because in theory these tokens of title deeds that the land department has officially recognized remove firstly the SPV layer that we currently operate under with the Dubai Financial Services Authority and their crowdfunding regime. When you eliminate that, essentially these tokens can be traded more often and maybe on more than one exchange in theory, but we're yet to see how that plays out.
Wow.
In terms of RWA tokenization, globally speaking, there's billions of dollars that have been tokenized, but yet to see a single platform be the leader in that space. Taking a step back, in real estate and fractional ownership, there are just less than a handful of players, at least at our scale, and we're really standing out of Dubai here because of all the right reasons. Dubai has so much going for it in terms of being an investment destination, and we're leveraging that and the benefits of tokenized or fractionalizing properties here. But essentially, where we're headed in terms of a tokenized world is very, very exciting. We believe in it and we're building for it.
That's super exciting. And obviously real estate, fintech, payments, stable coins, digital assets, you sit at that kind of crossroads as you mentioned. What do you think is the most underrated challenge people don't see there?
I mean, when you look at how users behave, going back to what Ricardo mentioned earlier, it's simplicity that matters. And ultimately, I would say that the adopters of crypto are a certain type yet, and we haven't yet crossed the chasm to mainstream kind of adoption. People are essentially now convinced that they need to be invested in the stock market, in specifically the S&P 500. Fantastic kind of movement in terms of retailification of the financial industry or the financial markets happened over the last 20 years with the proliferation of ETFs by the Vanguards and the BlackRocks of the world, and those are the largest financial institutions today because of that. And again, robo-advisors is another, kind of manifestation of the same, kind of behavior. But we haven't yet seen the mainstream adoption of fractional ownership of real estate, even REITs that are publicly listed and that are viable kind of ways of getting access to real estate in developed markets like the US. Haven't really kind of made their way in everybody's portfolio like the S&P 500 index trackers or a NASDAQ. Everybody understands that they need to be invested in those kind of underlying growth engines of the economy. But really, if you take a step back, more fundamentally, people need real estate in their portfolio more than they need the S&P 500. I'm a firm believer of that. At the more primitive kind of mindset level, people think that, when they make some money, they have savings. They think really, what do I do with it? Do I build, do I start a business, or do I invest it in real estate? Before they think about, where do I invest it? And that's where we really want to tackle the one that, the decision of investing in real estate. We want to make it as easy and simple as possible for people to do on an app from a few taps. We say you can buy real estate with us in under 3 minutes, and essentially that's been our tagline, and it's what we try and deliver on every day. I think that's the main challenge right now when you think about all the different, like you said, themes. And the crypto world that we're entering into, when I say that, I mean blockchain world and Web3, is how do you simplify that experience for everyday users so that they don't feel intimidated by the whole space. and really still now aligned with buying again real world asset tokens like real estate as easy as shopping on Amazon. That's the adoption is the key challenge that I see.
And it becomes from like voice and referral as well. As soon as more people say, well, I'm on stake and I've just made this amount of money, and then you get curious, and then it just becomes that monopoly effect, doesn't it, in reality?
It does, but again, real estate is not your get rich quick type of asset class that can move like the stock market, 10% a month, sometimes up or down, whichever way. So real estate is more stable, and that's why it should be, a core part of your portfolio. It's not going to take your allocation away from stocks and crypto, but it should be there for stability. It's not correlated to the rest. It's inflation protected. All the good, it's what we say, the best of all worlds. It behaves like a bond in terms of giving you passive income, like a coupon, the monthly dividends. It grows, like equity. So the capital appreciation side is there. And then you have this very important thing, which is, it has gold-like behavior because it's inflation protected.
Yeah.
And in this world that we're entering into, where there are a lot of question marks around the dollar, question marks around global debt, and the value of currencies. That's why gold has rallied so much in the last year or so. Real estate is essentially another way of making sure your the value of your savings is not being diluted or depreciated away.
I mean, you need to be on these Netflix selling Sunset, sponsoring everywhere there, whatever it might be, Made in Manhattan or whatever it's called. The non-sexy part, obviously, regulation, VARA, DFSA, SAMA, SEC. Like, which region's moving the fastest?
It's a good question. There's news yesterday that we saw that tokenization is happening in Saudi Arabia.
Yeah.
That we are at the kind of leading position with.
Because you said that, right? I think it was the thing where you spoke about real world asset tokenization will be one of the biggest beneficiaries of blockchain adoption as well.
Absolutely, absolutely. What I'm saying is, navigating regulatory waters is tricky, and no single app, by the way, that I know in real estate does it, and we do it. So we gotta firstly highlight that. Now it's a single app that gives you 3 products: fractional ownership in UAE, private real estate funds in Saudi Arabia, and then we just introduced right now Stake One, which is your full home digital buying experience. And so we're regulated by DFSA on the fractional ownership in UAE. We're regulated by CMA on the fund side, and VARA is coming online with us with the tokenization framework. And so, from a product standpoint and compliance standpoint, it's kind of it's full of nuances how you can kind of have a single journey for all of the above, or a way of switching from one regulatory environment to another. Those are the product challenges and compliance challenges that we face day to day. But who's in the lead in terms of kind of innovation? I think there's a race now for tokenization amongst the less so. There's a lot of emphasis among the financial regulators, so CMA in Saudi, and here in Dubai, DFSA and SCA. Those are trying to find ways to regulate the tokenization of financial instruments, which is a big theme. At FII. After AI, tokenization is the buzzword. It's the most kind of used term, and there's big believers from BlackRock to Blackstone. Everyone from the financial industry really believes in the power of tokenization to improve speed of transactions as well as liquidity. Now, when it comes to real estate, the real estate regulators in Dubai and Saudi are on a race to tokenize the title deeds. So it's very hard to. I mean, UAE, Dubai is in the lead because they've done a few transactions already. But yesterday there was an announcement that Riga, the Real Estate General Authority in Saudi, has tokenized the first transaction. So it's all happening quite fast. For us, not fast enough, being in the middle of it.
Yeah.
But for others, yesterday we were told, this seems to be moving incredibly fast.
Yeah.
So this is where we're headed. And soon enough, I think you can really look at the skyline and think, I want a piece of that, and it should be available to at least one unit in that building. That world is coming faster than we think.
And I don't want to go down, because you mentioned AI, so I don't want to go down a rabbit hole of it, because we'll finish the whole episode on that. I don't want to do that. But I'm assuming you'll be starting to adopt more and more, if you haven't already, AI in the business, which maybe around like user behavior, where they invest, getting to understand people even better, and obviously click of a button. Do you want us to invest in that? I'm assuming that might be the way where you're going.
Yeah,
AI
has been something that we discuss often. Again, we are trying to put, at the moment, AI usage on the company is mainly not on the forefront of the user experience. It's more how we treat data and how we analyze data and how we are creative, etc. But there are opportunities for us to use AI, and I think around efficiency, around personalizing the journey. It's a very fast-paced environment. But again, like, we are at the crossroads of these two main movements. Maybe blockchain tokenization is a big one. It's taking a lot of our time thinking about it, and it's coming up on next year for sure for us. And AI, I think it's here to stay. I think it's changing a bit the way we work and the way we operate. And we need to think, the world is going in a direction that everyone wants everything now. Everyone wants everything immediately, right? Even before, we used to search on Google, you're going to go through 10 results, right? And now you get a straight answer in a LLM, in a ChatGPT of sorts. So the world is moving into this very, very fast pace environment, and users demand that type of experience, and AI should be able to bring that to the user ultimately.
Yeah.
So think about that in any impact, like, could be about data, access to data, could be about inferring something complex, maybe understanding your portfolio, how it is performing, could be anything.
Yeah. And you've gone from idea to 1 million plus users in the last 4 years. Maybe I'm wrong a little bit on that data, but around about that, right? What does it mean in terms of joining Stake now, in terms of hiring A players, and what does an A player look like to you guys?
Okay, maybe means different things for us, which is fine. For me, look, for me, an A player, I think it's a still great opportunity to join where we already. I think I see it in a way. We are a growing company, and I think the best thing you can best thing you can do in your career, and I have had the privilege to do that in my career, is joining a growing company. You don't want to join a company that is flat or it's not exciting. So I think we are extremely exciting. We're at the forefront of all this tokenization, AI. So should feel exciting, should feel sometimes a bit chaotic and ambitious. I think we are trying to over-index for ambitious people that want to have maybe a shared vision. And I think we are, I over-index to people that really have customer empathy, want to build like I sometimes I say this to my team, and they look at me as like, I want to build the best real estate investment platform in the world. And, but people think, but you are in Dubai or you are in UAE. And I think that's the misconception. That should come from Silicon Valley. And I really believe we can do it. I really believe when we look at our competitive search globally, we are one of the top 5 platforms to invest in real estate in the world. Can we have that adoption curve that goes to the other end, that we just start getting known? But what I want to say is this: I think I over-index for that, and I would over-index for someone that is interested in scaling the business. So some people that think about systems, think about how to use AI to automate things, how to be efficient. I think we need to be really efficient, because we are in a race, like Manar said, to use all these technologies to our advantage.
Definitely, those things matter. I would say, agency is a key thing. Now, before I go into that trade, attracting talent from Dubai was historically difficult until COVID and 2022 things started to become easier to attract talent in Dubai because everybody wants to be here for all the right reasons. It was always let's say an untapped kind of opportunity for people, and now it's almost feels crowded because there's a lot of competition, and it's a great place to be to hire people in Dubai because the talent is wanting to be here. But if we single out a few the key traits for A players, like you said, I think it's a strong sense of ownership and almost like an independent thinking mindset to think out of first principles. You use a lot of curiosity to understand things at a deeper level, and ultimately have a strong sense of agency when it comes to delivering on that promise.
Yeah, no, I love all of that. Now, I want to talk about some of your recent partnerships. There's a number in your expansion. First of all, with the US, obviously you launched in the US the commercial real estate fund. Industrial real estate in the US is exploding. You got fulfillment centers, you got warehouses, logistics. How does Stake give access to an asset class normally reserved for institutions, and then just a general expansion into the US and how you see that?
Look, it was a dream always for us to. It's part of our vision is to build a world where real estate is open, accessible, transparent, liquid, and borderless. So we went into two markets as our core markets, UAE and Saudi, but it was always part of our plans to go to developed markets like US and Europe, and who knows other markets that people want access to. And geographic diversification was also another one of those where it's a risk for the business, because if one market goes down, the investors will get hurt, and we want to build the diversification score to protect them and ultimately protect the platform from being overly exposed to one single market. Now, when it's comes to US, we don't have boots on the ground there. It's not a core market where we have presence and operations from regulatory activity, like having fractional ownership or distributing funds locally and so on. We partnered with InvestCorp, so they are one of the best industrial asset managers when it comes to this particular asset class. They've done it for 40 years. And the consistency of the returns have been phenomenal. It's been a very, very consistent investment strategy to really ultimately deliver on the warehouses that the e-commerce kind of proliferation across the world it really requires, and so they've been delivering on those that need in the economy, and we wanted to partner with them to get access to that portfolio through a fund, and it's done through our Saudi operation because we have a fund distribution license in Saudi Arabia. So having ability to distribute funds, it gives us a way into larger assets that are structured as funds, and in that way can give you, as an investor, the geographic diversification that you need within real estate. And that's also a unique feature in our platform, because no real estate investment platform actually gives you multiple markets, let alone, like I said, multiple regulatory environments that we're having to navigate.
And is this also connected to you signing that strategic cooperation agreement with First Projects in KSA, or what that means for the business?
No, First Projects in KSA was, Cityscape was last week. There's a bunch of developers, in Saudi that are doing ambitious things, and it's been a phenomenal market, Saudi Arabia, in terms of real estate activity. The last 12 months have seen a flurry of new regulations come to the market, but that's just a partner in Saudi to originate more deal flow, more investment opportunities for our investors.
Yeah. And we obviously have to talk about your partnership and investment, everything with Property Finder, how that came about, what's the reason, where it's going as well. I'm assuming you didn't find it that challenging to have investors around you, and you've chosen that route for a reason, right?
Well, look, I wouldn't say we didn't have challenges fundraising. That's it's an oversimplification that doesn't apply. I think every founder kind of has the challenge, especially with the Middle East. Historically, attracting capital from investors is always a key objective of every founder. But we were very fortunate because we were knocking on Property Finder's door for the longest time. And kind of the stars aligned for us this year because we were at a juncture where we need to build scale, have access to more supply. Actually, we built the demand side of the equation to a large extent, and where our growth is kind of supply driven. I'll give you an example. We can't find high yield properties enough in the market. We have these strategies that we've built as well on the platform: high yield growth, capital growth, balanced fix and flip, and fix and lease, which are ways that we also kind of innovated with the asset class in terms of bucketing these properties into different strategies. And high yield is one of those that just is very popular and moves, it flies off the shelf. We can't get enough of those. So we really want to, kind of get access to the full market so that we can select those properties and make them accessible to our investors. And who better to do it than, with Property Finder, who's the dominant classifieds property portal, and at their intersection, in terms of their the point in time that we met them earlier this year. It was the right time because they were at the kind of juncture of needing to innovate their platform, integrate with partners. They just did a massive secondary capital raise with Primera and Blackstone. So they got a new set of investors that they need to show growth to, and so it happened at the right time for us, and I'll let maybe Ricardo give you a bit of a glimpse of what we said yesterday at our event in the Museum of the Future.
So the view is to really expand the stake offering to more users ultimately, and I think Property Finder is the right platform to do that in the region. We are, my day-to-day ultimately has been, working on that. So what we can expect is actually you accessing fractional real estate through Property Finder's portal and app. I think it will open the doors to a lot of investors because Property Finder is not only for end users, it's also for investors. And that's where we specialize. We specialize into you looking at an asset and understanding that asset from an investment point of view, not so much from an end usage point of view. And that's something that Property Finder is missing. It lacks that maybe more comprehensive look at the numbers. So it's where property intersects fintech again. I'm really excited. Particularly, I think we will enable a lot more users into our ecosystem, and hopefully we can develop a product that is very comprehensive. I know you had Fernando on the podcast, so I'm working actively with Fernando on that offering. So I think our both minds, if we align, and maybe like Manar said, if the stars align, we can be really together leaders in fractional tokenization in real estate. So,
is that the success in like if you look back in 12 months time?
Yeah,
that's
for me,
success.
it's have higher a lot of adoption from property seekers, investors, and using one more channel. I mean, we're going to continue to exist. Our channel continues to exist, but maybe amplify that channel through Property Finder's partnership. And to be honest, collaborate with them and them helping us. There's a lot of things that we can do together on the supply. I think we are experts on user experience and on the fintech side. They are experts on the property side. So I think we both, if we join forces, I think we will be doing a great product. Ultimately, that should be our measure of success, adoption.
So I've got quick fire questions to finish up. Just whatever comes to your mind, either or in terms of answering. So obviously the shift in generational investing, expanding boomers, Gen X, millennials, Gen Z. What do younger investors demand that older generations don't?
Faster, better, easier.
Faster, better, and easier. Now. Dubai's real estate market continues to grow, 16.5% in 2024, yields at 6.9%. What are the biggest myths about investing in Dubai?
That you can, generate these returns on off-plan properties, kind of by flipping them, fast enough. You really have to do a lot of curation and DD.
You've crossed AD 1.3 billion in investments, probably more. Where does the next billion come from?
Saudi, for sure. That's why we're there. We think that there's, under penetration for our product. So Saudi is a major, growth engine for us.
Over 50 million AD in rental income paid out. What does a typical investor portfolio look like in the next 12 months?
Somewhere between portfolio builders accumulating 30 to 50 properties, having a growing, compounding rental income. That's what we are observing. People just building portfolios.
Where do you see Stake in 5 years? In fintech, a real estate investor, a global investment platform, or something bigger?
Real estate is our core asset class. I would say we would be the kind of Robin Hood for real estate.
Robin Hood for real estate. If I was to invest £100,000 today, what do you think I'd make in 10 years on that?
100,000. Let's give the 5 year normally.
Yeah.
You probably make 50% on that in 5 years.
And last not least, obviously this podcast is breaking down barriers. What barrier did you break that changed everything for Stake, and what barrier are you breaking next?
Access. Liquidity.
Yeah.
Thank you for joining Breaking Down Barriers.
Thank you.
Thank you so much.
Ricci.
And I've got one more thing to add for our audience. So I've got something interesting for you and a quick ask right now. 72% of the people who listen to this podcast every week are not subscribed. That's totally cool. But here's the thing. Subscribing helps unlock bigger guests, deeper insights, and the kind of episodes that genuinely make a difference to the ecosystem. So if you're taking value from the show right now, even once, could you hit that button? It's free, it takes 1 second, and it generally helps shape the future of this podcast. And who knows, you might tap into the reason why we get the CTO of Amazon next month.